overseeing the Western region for fixed annuities with Genworth. And I'm glad you joined us today, and we're going to take a look at creating financial security with predictable cash flows. And as the invite said, it's more important today than ever before. Now, let me give you a little bit of a background on me. I've been with Genworth for over 3 years. I've been in the industry since 1993, and actually I've started off doing sales just like what you're doing today. And I've seen a lot of different things kind of come and go. I've worked with a lot of different products, and I have to tell you, this is a great opportunity for selling fixed annuities. And some people might say that interest rates are too low. Well, you know what? It's what we're competing against. Those interest rates are also low. So I'm excited to go over the presentation. And you know, when we take a look at today's marketplace, there are a lot of different challenges that clients are having. And you know, what we feel is that these challenges sometimes create opportunities. You know, markets are still below historic highs. Well, how can we help protect wealth? What I'm seeing is kind of this risk realization on behalf of the client. Clients didn't understand that their stock portfolio might drop, you know, up to 40% or 45%. They didn't understand that if they were taking an income flow, that their income might take a hit. So, you know, what we found is 1 in 5 Americans have moved their assets to safe havens, and that creates an opportunity for you because annuities are considered safe havens. And you know, we've also talked about diversification, and I'm sure you've heard that word come up before with different companies. But you know, diversification matters now more than ever before. And really, with diversification, we're actually going to take a look at income diversification, not necessarily that accumulation diversification that you normally talk about. But one of the challenges with diversification is that you can't really diversify away all the systemic market risk. You can't get rid of all the risk on a client's portfolio, kind of regardless of what you do. But you know, if clients are looking at kind of reducing that risk, it creates value for annuities. And what we found is it's kind of a back-to-basic type approach with annuities, and highlighting the many benefits of fixed and immediate annuities like tax-deferred growth, certain creditor protections. Even here in California, we have annuity creditor protections. You know, different safeties, the principal protections and that of the annuities is a pretty good thing to talk about today. And what we're finding is it's just, you know, not just a solid payout or an interest rate. It's actually the added bells and whistles. And at Genworth, we have a few different bells and whistles that we'll talk about today. So it's time to get creative. Let's start getting creative here and ask you a question. How can you help your clients achieve financial security? Well, we have 4 different ideas today that I'm going to go over that can help you kind of help your clients. We're going to take a look at that cash flow diversification. We'll take a look at prospecting for 401k rollovers. I'm not sure if any of you work within the group business marketplace, but prospecting for 401k rollovers is a huge opportunity today. The power of tax deferral, well, gee, you know, that's tax-deferred growth. So what do we mean by that, and how is that actually going to help my client? And then we'll take a look and just examine fixed annuities versus certificates of deposit, because after all, that's kind of the number one competitive asset that we go against with annuities. So let's hop right into it here and take a look at asset allocation. You know, when we take a look at asset allocation, typically we think of accumulation and the pie charts and how we're having the different slices of the pie. Well, with diversification at Genworth, we're actually talking about income diversification, and we think it's more important than ever. Basically, it's more important because people's income streams, if they're in retirement, have taken dramatic hits. Interest rates have dropped. You know, like 5 years ago, we had interest rates of 5%. Well, now interest rates are just over 2% on a 5-year CD. That's almost a 60% reduction of income if your client was living off that interest income. If we take withdrawals from a stock portfolio, well, again, stock portfolio has been reduced, and so the income's been reduced as well. So some points to consider when performing a portfolio review. I'd really invite you to take a look and find out what cash flows that the clients have are guaranteed or expected. What we know is Social Security pension plans, typically those are guaranteed. Most other income sources, however, are just expected, except for immediate annuities. And immediate annuities can provide that guaranteed income that clients are looking for today. So another question you might want to ask your client is, what proportion of assets are principal protected? They might look at you funny and say, what do you mean principal protected? Well, what proportion of your assets could you lose? What ones don't have protections on them that safeguard the principal? And that can work really well, especially for those clients who have been impacted by the current environment that are kind of examining their risk strategies right now. So review the portfolio's ability to flex with surprises. Accidents happen. You get in a car accident and need to come up with money for a health insurance deductible and automobile deductible. Well, where's that money going to come from, and how can the income strategy withstand a shock or unforeseen event like that? It happens, right? Might not be a car accident. The air conditioner might have gone out. The kids might need some extra money. The roof might be leaking here in the Bay Area. With the rains we've had. I mean, things happen in clients' lives, and if the portfolio isn't able to flex with surprises, it's not going to work very well. So with the annuities at Genworth, our deferred annuities, you can have up to 10% access, penalty-free, or surrender charge-free, I should say. And our immediate annuities, we have some features that you can actually take, and it creates liquidity even on immediate annuities. So how can we enhance cash flow stability? Well, return of premium is definitely a hot topic today. Return of premium basically ensures the client that if interest rates go up, the client can get all their premium back and take advantage of those higher interest rates. And they aren't going to have any surrender charges with that return of premium guarantee. The immediate annuity with income flexibility, I mentioned that already, some of the features that we have that our competitors don't have. And then also the deferred annuity with tax-deferred growth can certainly enhance that cash flow stability. So let's take a look at a typical scenario here. And Greg and Marcia, a lot of people are challenged when they take a look at when they want to start taking Social Security benefits. And I'm sure some of your clients might have taken a look at that, and they're having a challenge deciding, do they want to take income at 62 and take a reduced income, or do they want to wait and start taking income at 67? What we found is that an immediate annuity, just a period certain type immediate annuity, could be a nice bridge to help them get from 62 to 67 and not have a reduction of Social Security benefits. And what we'll do is we'll have that immediate annuity for 5 years, and then we're actually going to combine the deferred annuity and the Social Security to create income starting at age 67. So how do you do this? Well, the client's going to benefit because the immediate annuity is going to provide that guaranteed income. We do have liquidity with a feature called Income Advance. Income Advance allows a client to have the ability to advance up to 12 months of payments for whatever reason. So, that automobile deductible that the client needs money for, well, hey, just advance up to 12 months of payments from the immediate annuity, and now you have the money to cover that. Now, the catch is if you advance 6 months, you're not going to get payments for 6 months. Month 7, payments will resume, and the payments aren't going to be affected at all. It's going to be the same type of payment. It's just we're advancing the 6 months. So with the deferred annuities, we're focusing on that tax-deferred growth, kind of that stability that the client's looking for today. And at Genworth, what we do on our deferred annuities is we basically allow clients to annuitize at current rates. So having the ability to annuitize at current rates instead of some lower rate is definitely a benefit for the client. So you can help your clients bridge for, let them wait for the Social Security benefits. Their benefits will be higher. You can provide that flexibility to help the clients if their future needs change, because you don't have to have that income. Maybe they win the lottery. They don't need that income. They just let that deferred annuity grow. Or, just helping with good income planning, certainly you're going to be able to get referrals by doing that as well. So let's take a look at another opportunity that we found, and certainly we all know the stories of 401ks, but you might not have known that the average boomer has held more than 10 jobs. In fact, the Employee Benefits Research Institute study found that the percentage of people who cash out their 401ks when exiting a job is highly correlated with the age of the worker, and not surprisingly, the younger the person is, the higher percentage chance that they're going to take a cash distribution from their 401k. They might just need it to get through if they got laid off. But when we take a look at kind of our market, age 50 and over, the percent of people that opt for a cash distribution, it becomes much lower. So what's that mean for you? Well, it basically means that your clients might have multiple 401ks that are just sitting there with the company. And remember, every company that has a participant on the 401k plan, they're paying a cost for that participant. So if you work with businesses, you can say, hey, I'll help your clients transition and have more options as far as their retirement instead of just the limited options the 401k is offering, and move them into an IRA or a Roth IRA, and basically give them a choice on what type of assets they want. Use annuities, use maybe immediate annuities for those older clients. Maybe they want that income stream. So what we've seen is that clients do get puzzled. The more 401k or retirement plan assets that they have, they actually like consolidating. And you can do that with annuities. Take a couple of 401ks and roll them over into the IRA, maybe with our Secure Living Liberty, which right now we have a one-year rate up to 5.1%. That sounds pretty good. So help your clients with that. So let's take a look at that. And I mentioned our Liberty one-year rate of up to 5.1%. Alice here is 60. She has a couple of 401ks. She's really more conservative, I guess would characterize her investment style. She's really looking for kind of stable growth and guaranteed retirement income. She doesn't want the ups and downs that the market has provided lately. So the solution we came up with is using two fixed deferred annuities, the Secure Living Liberty and Secure Living Smart Rate. The Liberty has a bailout feature that basically if our interest rates drop below the bailout, which is currently 2.6%, the client has a 45-day window to take all their money out without surrender charges. It's a pretty good option. So if interest rates go down, the client can access the bailout rates. But right now, 5.1%, that's very, very competitive. If Alice wants to create an income stream, she can annuitize that contract after the first year, so starting in the 13th month, to create that income stream. But she was concerned about interest rates possibly going up, and that second 401k, we actually looked at the return of premium benefit that Secure Living Smart Rate has to offer. If interest rates go up, well, great. Alice takes her premium back, and she puts it into a higher-paying annuity because those interest rates have gone up. Basically, what this is going to do is it's going to give her stable cash accumulation, and if she's wrong, if interest rates stay level or if they go down further over the extended period of time, Alice is still getting a competitive return. That best rate is up to 4.8% on a one-year rate with the Smart Rate. So client benefits, they get a good foundation for income later. Alice is 60. She doesn't necessarily need that income stream today, but what happens if something happens to Alice's health and she can't work anymore? Well, she might need that income stream. Annuities can provide that. Has guaranteed rates, the tax deferral. Both of these contracts have no market value adjustments, so if Alice needs money sooner rather than later and she takes a withdrawal, she's not going to get penalized for that. And certainly growth potential because both contracts have different interest rate lock periods, 1, 3, 5-year rate lock periods. And that return of premium feature I mentioned, things change. Alice could certainly have things that impact her life that maybe she needs money now, or maybe the interest rates do go up. She can access that return of premium. So how does this help you? It certainly creates more cross-selling opportunities. Looking at that 401k, if you're in there and maybe you're working with health or life insurance or whatever, well, take a look at the annuities. If you talk to the HR director at the business, they're going to want someone to help transition people off the 401k plan into the Roth IRA or an IRA type plan, just because they don't want to pay that participant charge. It's going to actually reduce the cost for them. So it creates more client flexibility because you have different products that you can work with, and certainly we think Liberty and Smart Rate are good choices for you.